Trading recent reverse splits is a new strategy that I've been working on for about the past 6 months or so. I finally nailed a great trade today on BPTH, a recent reverse split that ran 177%. I captured about a 60% gain, and in this video, I'm going to walk you through that trade. I'm John Papa, I'm an OTC trader, and I'm trying to break out into listed stocks, and this is Sublime Trades. Before I get into the actual trade recap, let me just talk a little bit about this setup. This is based on some fundamental factors that can cause companies to actually pump their own stock. This is really a modern day pump and dump that doesn't have promoters involved. It's just the company doing things to either keep themselves listed or to raise capital or both. And it's just eye-opening to be able to put together the technical analysis with the fundamental analysis, digging into the SEC filings to actually find these before they happen, to know what's happening and why it's going to happen, and to be ready for these plays. So this is the daily chart since about the beginning of the year for BPTH. And as you can see here, on January 18th, they did a 1-for-20 reverse split. Now that means for every 20 shares that existed previously, they consolidated those into one share and the price increased by 20 times. So on the day previous, they're trading right around 12 cents a share. And then they did a reverse split and they took their outstanding share count from about 13.6 million shares down to 680,000 shares. And it increased the price from about 12 cents to approximately $2.50. Now, in this specific case, I believe the company did the reverse split in order to meet the minimum bid requirements. I think that they fell below $1 for 30 days and they got a delisting notice from the NASDAQ. And in order to raise their price back above $1 for 10 consecutive days, they needed to do the reverse split because otherwise they just weren't going to be able to get their share price over that dollar level. Now, a strange thing happened with this one. The reverse split happened on a Friday, and on the following Monday, January 22nd, they announced an offering. So they offered, it was about 650,000 shares at $2.65, right about here, plus another like 325,000 warrants exercisable at that same $2.65. Now, this threw me off a bit. I wasn't really sure what to do with that financing in place so close to their current price. I know that if they have previous financing in place at much higher prices, it's possible that they're going to try to pump their stock up to that price, up to that exercise price, so that they can get that money. In this case, I wasn't really sure, and so I stopped watching this one so closely. You know, I kept it on my reverse split watch list. I kept my alerts on it, but I wasn't really looking to play it. And so that brings us to February 28th. So that's this day here. So the stock hadn't really done anything for a month. Then they split on the 18th of January. They announced that offering on January 22nd. And then the stock basically went sideways for a bit over a month. And then on the 28th, they put out a press release in an 8K saying that they were going to announce some findings. This is a biotech company. They're going to announce some of their findings from something at the 2019 AACR annual meeting. And that popped the stock from about $2 to $2.60. Now that's about a 25% gain. I saw it happen. I was in some other trades and I didn't try to take this trade. Now the next day, it went from $2.60 and it touched $8.86 from $2.60. That's a massive, massive gain. That's like 400%. I missed it. But it was good to see. It's good to see that the reverse split strategy does work and it can let you know that a stock may have a parabolic move. I thought that that was it. And the last thing I want to mention on this daily chart is this move right here. This 4 or 5 day move. This is the fundamental structure of the market. Now I'm going to get deep into that structure in future videos. It's something that's going to take me a lot of videos to really get to in depth. I'll start off real simple, just going over that structure, but I just want to put that in your mind. This structure right here, get to know that move very, very well. Okay, a few more things actually before we get into the intraday chart and my actual trade. Some of the catalysts, in addition to what I've already talked about, that led me to take this trade and led me to hold with such conviction for such a long period of time today, were the following. So, of course, number one, the recent reverse split. That's huge. Super low float. The outstanding share count must be about no more than 2 million shares. They had 680,000 shares the day of the split. They offered another 650,000, so that's going to bring it up to 1.3 million shares outstanding if that offering got exercised here once the price hit 265. Plus there was those 320,000 warrants. So most they had about, actually I guess 1.6 million outstanding shares, and so the float is somewhere below that. Now this day of this big move, and this was actually about a 240% move. On that day, it traded basically 59 million shares out of 1.6 million shares outstanding. That's crazy. That's so much float rotation. So the next couple days, the stock pulled back fairly hard, and the next catalyst was that yesterday, so the stock had closed on March 4th. The stock had closed at about $5.50. On March 5th, the stock closed at $4.61 and actually hit a low of $4.38. So it had dropped more than 10%. That meant that the stock was now under SSR for that day and the following day. So the stock being under SSR today was a big part of what helped my conviction in holding as long as I did. Now another thing was that today they released another press release that was fairly good news. Let me take a look at it here. It was a clinical update to interim analysis of their phase 2 trial for some leukemia drug. They had some positive interim phase 2 news. So positive drug trial news is always a good catalyst, and that combined with the recent reverse split, combined with the low float, combined with the potentially very high volume because of the volume from this day, combined with the SSR, all of these things combined together for a perfect trade. And with one last thing, it was this multi-day breakout. Now, if you've watched some of my other videos, or if you followed me on Twitter, you know that OTC multi-day breakouts are my main setup. If this was an OTC chart, this chart is all I need to see. I'll play this purely off the technicals of having a big spike, a pullback and consolidation, and then breaking out past this high. Now, this doesn't work so well with listed stocks, so I don't necessarily play them. But in this case, it was just a perfect storm of events happening that led me to get into this trade. If you're finding this info useful, please smash that like button, subscribe to my channel, leave a comment, let me know what you think, let me know if you played this, let me know if you have any other questions about this trade. Now let's get into the intraday chart and see my actual trade. So I'm going to bring up a 3-minute chart. Now I trade off of a 3-minute chart as my lowest time frame. In some of my previous videos, I've talked about how I always am looking at a 3-minute chart, a 1-hour chart, or a 65-minute chart, and a daily chart. I want to see at least all 3 of those time frames at one time for any trade that I'm in or any potential trade that I'm looking to be in. So let's see what happened here. They put out this press release. Let me see if I can find the time that this press release happened. This is Equity Feed here. And so it says that the press release happened at 4:32 a.m. And so that's going to be 4:32 Eastern time. So that's really early. I didn't realize that the press release had come out that early. If I had actually been awake, it's possible I could have entered down here below $5 a share maybe. Anyways, what happened was I woke up and I was going through my charts on Thinkorswim Mobile. Now, this is something I tend to do every day. I'll wake up, I'll grab my phone, I'll look at my watch list on Thinkorswim to just see if anything's moving yet. And now, you probably can't see this, but TOS, oh yeah, you can. So they have these little things, it's called a spark chart. It's just basically a really small line chart. So you can see the recent action for every stock on your watch list. So I was scrolling through my watch list and I noticed that BPTH, it looked like it had been kind of going sideways and then had a big spike. So I opened up the chart and I look at it and I see these two bars, these two big bars here, and the price was right around $6.60. So, from it had closed the previous day at $4.63, it looks like, somewhere around there. So it had made a big $2 move all of a sudden in the last 6 minutes previous to me waking up. So I was like, wow, this looks like this may be a big run. This just ran big a few days ago. Let's see if there's a catalyst. So I switched to the news. I saw that news about the positive phase 2 interim data. And I know that positive phase 2 data and positive phase 3 data can be really good catalysts for these biotechs. This is interim data, but I still felt that, combined with all of the other catalysts that I talked about, that this could be a really good play. Now, something I've been doing a lot recently that I've been working on is I've been buying the top of initial spikes. I see these stocks moving, especially these reverse splits that I want to play. I see them spike up like this. I want to get in. I don't want to miss this massive move. I buy it. I chase the spike. I buy it. And almost without fail, a few minutes later, it has the, a big pullback. And I could have got a much better entry price. So I've been really aware of that and really trying to improve on that. And so let me find my actual entry prices. So I was watching this and I'm waiting for a pullback. I'm not going to chase this stock. I want to get in. It's going up. I know it's going to pull back. This is related to that fundamental market structure that I'm going to talk about in future videos. But just know that stocks don't go straight up. And so the stock actually had topped out right about there and it started pulling back. And I put in an order, I think it was right around $6.21. And I missed my fill by a penny or 2 pennies right here at the bottom of this first pullback on this red candle right here. So I missed my fill. I was still going to give it a little time because it didn't immediately pull back to my order price didn't mean that it wasn't going to keep pulling back a little bit more and fill me. But then it started going back up. And so then I went ahead and I bought 200 shares at $6.50. Let me see if I can draw some of this. So on this next green candle right here, I got 200 shares at $6.50. And then my next order was another 100 shares at $6.82. And so that was, it made this little move and a little flag pattern here where it spiked up and then it consolidated sideways. And so somewhere right in this range, I bought another 100 shares at $6.82. And then, let's see, I had an entry at $6.75, which was, so I probably bought that $6.82 kind of early in this consolidation here. I bought another 100 shares at $6.75. And then my last buy order was at 686 on this pullback. So it had spiked up over $7 here. It hit nearly $7.20. And then on this pullback, I got in another 100 shares at 686. And I think it was on this initial pull right there. And so that was it. So 200 shares, 100, 100, another 100. 500 shares. Now this gave me an average price of $6.68.6. Let me draw a line here. Basically right there is my average entry price. Now, one thing you'll notice right off the bat, I never was down on this trade. After these first 200 shares, I was down a little bit on this next candle, and that was it. Then it popped up, and then I was just green on this trade. I never really had to worry about my risk. And I don't remember. I think on those first 200 shares, I was risking something really wide because of this big move. I was risking about $5.50, like $1 a share. My average risk these days is right around $200 per trade. And so I only had 200 shares. So at that point with the 200 shares, I could risk $1 a share to the downside. And in this case, if it had pulled back and held that 550 level, just because of the whole dollar, half dollar, possible support and resistance, there's a good chance I would have added on that pullback. Luckily or unluckily for me, that pullback never happened, and I was just green on this trade. So now I've got my 500 shares, and I'm waiting to see what's going to happen at the open. And so you can see after my last ad, it consolidated sideways and then popped from there. And, I was pretty good. It wasn't making any real big moves, but, the volume was still pretty low. If you could say low, it's trading maybe 100 to 150,000 shares every 3 minutes. So for pre-market, that is still pretty high volume. I believe it had already traded, I think it was about 2.6 million shares or so as we're approaching the market open. Now that's already going to rotate the float. Remember, the float's somewhere below, what did I say, like 1.6 million shares? So we've already traded like 1.5 to, approaching 2 times that many shares maybe in pre-market. A few minutes before pre-market, it had started doing this, just a little bit of consolidation and pullback, and then it had a nice hard spike up, and I felt pretty good. So right at the open, you can see this massive candle traded 2.2 million shares in the first 3 minutes of the market open. Now it spiked up to about $7.80, and then it pulled, but it only pulled to about $7.10, and it held there. So I was still very green. At this point, I was probably risking off of like this initial low from this dip down here at about the 620 range. But since it never even hit my entry, I was okay being patient, and I was watching this. I know a lot of these stocks, they can take about the first 15 minutes of the day to consolidate before they start spiking really big. There's this other strategy also that I also learned from Roland Wolf that he calls a gap and crap reversal, where a stock will spike up pre-market, it'll flush out of the open, but hold some support level, and then it spikes from there. And so kind of taking that strategy into account, I was able to be pretty patient and wait for this to find a base and start moving. The stock ended up finding a base right here at about 691 over this 6 minutes here. It held that level, which was near the bottom of this consolidation, and it was kind of the top of some of this initial moves. So it was just lined up really nicely on that level, and then it spiked from there. And so it hit 822 on this run, just green candle after green candle. I was feeling really good about this, and let me zoom out a little bit. And remember, I was looking for a potential multi-day breakout. over this level here from a few days before at I think it was 884 was the top, like right there. Let me go ahead and draw a line for you there as well, because this was a big part of my plan also. So I'm looking for a breakout over that level, because on these listed stocks, when these multi-day breakouts do happen like this, when they've made a huge move on massive volume and then consolidated like this, and then if they can re-break out over that level, they can really move. And so that was part of what I was looking for, as I mentioned earlier. So this made this move. Let me get another drawing tool. So it made this move, pulls back. So I went ahead and I put in an order. So that was 884. I put in a sell order at like 879, because I wanted to make sure that I sold, at least like 100 shares right up here close to this breakout level, in case it didn't actually break out, in case that resistance level held. Now, I wasn't too worried about bag holders because of the massive volume. Remember, really low float, huge volume. So if there was still people who were holding shares really anywhere in this level above my entry, they had easy exits. And look at this, right into the open, where it traded, more than the float on that first 3 minutes. That gave everyone who was underneath this line right here a chance to exit, break even. So there was only a little bit of volume right here, and then right here above that price, from the open right out of the gate. And with this massive volume, I just wasn't worried. If you have, 100,000, even 500,000 shares worth of bag holders up at this higher level, what's 500,000 shares when this is trading 750,000 to 1 million shares every 3 minutes? That's nothing. Those people can get out. There's no resistance from those possible bag holders. So I wasn't too worried about that. I did want to just make sure I took some good profits though, because that was, this breakout level was nearly $2 a share above my entry price. That's a 30% gain. But this did take longer than I expected to actually get up to that breakout level. It was kind of grinding a little bit slower than I thought. I expected after this big move and this consolidation that it might pop right up, test that level, pull back, and then break out. But it ended up taking, a bit longer to actually get to that breakout level. So let me see where I started selling. I sold my first 100 shares. I ended up selling it at $8.28. And that was at 10:27. So that was right here. Right around there, I sold my first 100 shares. So it came up, tested that breakout level, pulled back, consolidated, and then popped right through the breakout level. And now in this case, I was putting in orders, sell orders, $1 or $2 ahead of like where the price actually was, mainly using whole dollar, half dollar levels to try to determine where I might want to possibly take off some shares. So after this breakout, I was really looking for it to at least test $10. So I put in a sell order for 100 shares at $9.99. And look what happened. It broke out and it went straight up to that $10 level, and I got taken out right there. Super happy about that sell. So, it goes all the way up to about 1060, pulls back and consolidates, pops back up and pulls back a little bit, and then keeps going higher. My next sell order was at $10.90. So again, the whole dollar, half dollar, I'm thinking, okay, I sold some at $10. Can I sell some at $11? Let me do it a little bit below 11, because other people are going to think like me and not want to sell it right at 11. They're going to want to get out at 10.99, 10.98, 10.95. So I put in an order at 10.90. That order got filled right there. This trade's working out so perfectly. Okay, we hit $10. Okay, we broke out. We hit $10. We hit $11. Let's see, $12. Put in an order to sell at $11.88. And it came close here. It hit like $10.73 or so on this initial pull, and then it pulled back. Now this was a pretty hard pull, but because it held this level, which was the high from that breakout level, resistance becomes support. So broke out through this previous resistance, that should become support. Some resistance was created here, some short-term resistance because it pulled back. And so here when it pulled back and it held that level, I felt okay through this consolidation here. Plus, like I mentioned, the SSR was in place. So that means that short sellers cannot hit the bid. Short sellers have to sit on the offer, and a buyer has to come up and take the offer to buy those short shares. The only people that can hit the bid are sellers, or people who are already long the stock. If they want to get out, they can sell. And I really wasn't too worried about that because this is basically hitting, new highs. This is really, since the reverse split, this is hitting like all-time highs since the reverse split. Once we broke out past this red line here. So really, any of the longs, or for the most part, they're in the green, depending on if they're, if they have really tight risk and they're buying at the top of these spikes, then maybe they're selling here. But for the most part, most of the people who are buying and holding for any period of time are green. So I was okay holding through this as it was holding this level here above the top of that spike. So like I said, I had already previously put in my sell order for $11.88. Now I'm not actively trying to execute my sell orders as these spikes happen. Like I say, I'm looking ahead and just thinking, basically whole dollar levels. Let's try to get out below those whole dollar levels. And so $11.88, I got executed, right around there at $11.88. And now for this one, actually, so this 1090 here, so I had sold 100 shares and 100 shares. So I was down to 300 shares out of my initial 500. I was thinking that this was just looking so good. It was so on trend. If I was looking at like my 10-minute chart, which is another chart that I look at, I really use the 3-minute chart for my entries. In this case, I kept it on a 3-minute chart just because of the higher volatility because of the volume. But a lot of times I'll switch to a 10-minute chart as my lowest time frame once I'm in a trade. And on a 10-minute chart, this was just like green candle, green candle, green candle, green candle, like it was just so on trend, just going up. So I'm like, okay, I need to scale out a little bit slower now. I don't want to run out of shares because I was really targeting like a $15 to $16 level. I think that on the daily chart, the 200 SMA on the split adjusted chart was landing somewhere around like the low 16s. So I was thinking I wanted to be out by $15. And I was thinking that this had a good chance to actually test that level. So, yeah, so this sell was 50 shares. This one was 50 shares. My next sell was at 1272, which was right here. And that one was pretty good right on the top of that before this pullback. And now after that, I put in a sell order at like 1362. And now I'm pulling it down a little bit. Instead of going right under the next whole dollar level, I'm actually trying to get just a little bit less than another dollar gain on my remaining shares. So, 1090, 1188, 1272. But then I placed one at like 1368, 1362, somewhere right around this level. And I would have got executed right here. Now, this is where I made my first mistake on this trade. This move, it was starting to really go parabolic, I guess. And I got greedy. I was looking for that $15. I really wanted to sell a little bit below like $14.50 or so. And I was down at this point, so 100, 200, 350 shares I had sold. I only had 150 shares left I was like, maybe I don't want to sell right here at 362. Cancel that order. On this candle, I canceled it right before it would have filled, and I put in an order at 44. So this spike topped out, this initial morning spike, it topped out, looks like 14.21. So I had a sell order right around here, canceled it, put an order right here, and just missed getting that fill. And then we had our first real pullback. So that was a mistake. Not a huge mistake. It was I would have sold 50 shares there, and I didn't. But so it pulled back, and then I was okay with, because again, that fundamental market structure, stocks don't go straight up. They need to pull back. Generally, there's a morning spike that tops out earlier in the day. It'll pull back and then maybe consolidate and then respike into the afternoon. And now, part of my plan going into this trade was to hopefully have at least 100 shares like post 2 p.m. Eastern into the afternoon, going into power hour, in case there was an afternoon spike. So I was fine holding it through this pull, this where it started popping back up here so quickly. That was a little bit surprising. I expected like a bigger pull and then kind of more sideways action, but it popped back up into about the 1350 range. Then it had this fairly hard crack here from about 1330 down to about $12. So that was a little discouraging. I still wasn't too worried. It was still holding this support level, and I was really, at this time, I was risking somewhere around $11 or $11.50 with my remaining shares. And so I held through that just fine, and it fairly quickly recovered from that. I'm like, okay, this is good. Maybe it's just going to consolidate sideways in a channel between maybe this like $12 and $13 level. And then this pullback happened, and this looked bad. This, it popped back up to about 1330, and then it pulled within 10 or 15 minutes. It pulled all the way down to $11. And now that was about it. I wasn't going to give back much more after that. So I started selling. So at 149, I sold at 1130. So I sold another 50 shares right there. Just like a few minutes later, I sold at 1141. Just right about there. And then I was down to 50 shares. And so now it's like, okay, I've locked in very decent profits. At this point, I had locked in $1,700. So this was initially, how much was this position? Let me get a calculator here. This was about a $3,300 position initially. So I've already locked in, at this point, I've locked in like $1,700. So more than a 50% gain. And I've only got 50 shares left. And remember, 50 shares from down here at this green line. And I'm still up, nearly 100% on my last 50 shares. So I held it, and it's consolidating sideways. I'm thinking, yep, that looks pretty good. Let's hope to get like one more pop, and then, I'll get out on this last pop. And when it had this nice green candle here, pushed and tried to test this kind of channel that it had been in. Pulled back just a little bit and consolidated, and then popped up here, and I went ahead and I got out at 12.12 with my last 50 shares right there. Now these three sells were a bit disappointing. I had planned to sell 50 shares here, and I canceled that order. I ended up taking off 100 shares down here near the bottom of this pull, and then I took off my last right here. This one was okay, but I really wanted to sell a little bit in the 14s, and it ended up testing 1462. If I had not sold all of my shares here, I definitely would have been out in the $14 range here. But overall, this was a great trade. I made $2,000. It was, I think my exact profit was $2,000.50 on just 500 shares, $3,000 position, $3,300. That was a 60% gain in a single day. And again, this was based on fundamental factors that led me to at least have this on my radar to know that a parabolic move like this was possible. So I think that's it. That was my trade recap on BPTH, a recent reverse split. That went a bit longer than expected. Thank you for watching if you did watch that to the end. And if you did, please smash that like button, subscribe to my channel, leave a comment, let me know what you think. Let me know, are these videos too long? Am I going into too much detail? Are they too short? Is it just right? Let me know what you think, and I'll try to improve. Thank you for watching. I'll catch you later.